Hey guys, it's your boy Ghost. We're gonna be making a video today, and basically our topic is gonna be on market structure, guys. So, guys, this is the first ever video on this channel, and smash the like button and share. Very important, guys. Let's get this community growing. So, guys, basically, this is the most overrated um topic in trading, and so many people just overlook it and they go ahead and look for holy grails in the forex markets and try to find something better out there. But nevertheless, guys, the key thing is understanding market structure. That's what I've been basically using to trade, and I've gotten the consistency I need. Yeah, so guys, let's head down straight to business today. So first of all, we're going to be looking at, like I said, the topic is market structure. So I'll just hit the nail on the head and let's not just talk too much. So first of all, what is market structure? Now we just know market structure, but we don't know what the meaning is. So like the meaning of market structure is the behavior or the condition in which the currents of the market flows. You understand? So basically, we have like the highlighted the supports and resistance levels, swing highs and swing lows. So a trend is basically formed based on the market structure. You understand? Over time, a trend is being formed due to the market structure being formed. So basically, now how does this market structure we are talking about works? How does it work? You understand? So now the easiest way we could use to put in place and understand that or how market structure works is that market structure is the basic and the principle of how the forex market works. A market structure in forex is what determines the direction of the market. Simple as ABC. It just determines the direction of the market, guys. Just the direction of the market. So, however, there are basic three moves that are formed in the market, which we're going to be talking about today. So, first of all, what is the first move, or what is the first move that is being created in the market? So the first move that is being created in the market, guys, is an upward trend. Now there are basically three. We have the upward, the downward, and the consolidation, which is also known as the ranging or sideways movement of the market. So I'm going to give you guys a little anatomy of these three moves. So basically an upward move is a trend that moves to the upside. So that's an upward trend. This is how an upward trend looks like. So the downward trend looks like this. We have new swing lows and new swing highs being formed as price scales down the downside. Yeah, then how does the range move? The range just moves up and down in just a sideways manner. It doesn't create new highs or new lows. They just keep on moving continuously. So this is three different types of move in the market. So put that in place. So basically, this is the consolidation. Yeah, then this is a downward trend. Then this is an upward trend. So that's the three basic moves we have in the forex markets. Now we're going to extensively talk about the upward trend now. So now, first of all, what is an upward trend? An upward trend is a trend that forms new swing highs and new swing lows. You understand? So what is an upward trend? And what's the key things we're going to be talking about in an upward trend, or the subtopics are what an upward trend is all about, the features of an upward trend, and how to trade an upward trend. So let's dive right into it. Now, what is an upward trend? An upward trend is an overall move higher in price, created by higher highs and higher lows. It describes when price is moving upward or getting higher. So basically, it's the overall move to the upward side, like I showed you guys. Now it creates new highs as it goes higher. So basically, new highs as it goes higher. That's what an upward trend is all about. So that is how you know an upward trend, because it forms new highs as it goes higher. So make sure you keep that in your mind. New highs as it goes higher, new highs as it goes higher is higher than previous one, higher than previous one. and it's higher than the previous one. So that's how you identify an upward trend. Now, an upward trend is therefore composed by higher swing highs and swing lows. So as much as price keeps making these highs and lows, like I said earlier, the upward trend is considered to be intact. What do I mean by this? Now, you can only say there is a change of an upward direction only when price must have cleared the last low and we tested it and continued. Then we can now say we have a change in an upward trend. But that's not what we're talking about now. Okay, I'll get right into this now. Now, basically, what are the features of an upward trend? The features of an upward trend is these highs and these lows. Now, first of all, this high is called the higher high. And not, this is called the higher high here. For the higher high. And then this is called the high. So this is called the low. The higher low. So basically, guys, this is called the high, this is called the low, this is called the higher high, and this is called the higher low. So as it keeps on making new higher highs, it means that the upward trend is intact. You understand, guys? And so far it doesn't break the last low, you cannot say that the trend has changed. So since we know that those are the features of an upward trend, how do we trade this upward trend? So many people have problem trading an upward trend. But my advice here is keep it simple. Don't make your charts look so dirty and nasty all the time because basically you will not be able to assimilate the information there. You understand? You will not be able to read the data of the charts. So make sure your charts are always neat at all times so you'll be able to grasp what you're doing and you'll be able to keep track of what you're doing, guys. So now, how to trade an upward trend? Traditionally, the way to spot an upward trend is to look for higher highs as well as higher lows. That's because buyers are active and driving the price up, like I told you guys. So there's also a quicker way to buy in on a dip. Traders utilize trend lines to identify an upward trend and spot possible trend reversals. Like I told you guys, if you want to know if the trend is still intact, you look at the recent low and see if price must have broken the recent higher low. If price have not broken it, then we're still on upward trend. So if you're using the trend lines, you have your trend lines this way and you still keep your trend intact. So once price breaks your trend line and retest it, then basically you're going for a sales. So that is how you know um an upward trend is still intact. And how do you trade this upward trend that we know? You understand? You can also use trend lines, and whenever it comes to the trend line, you buy and stuff like that. Or you trade with the market structure, which I'm going to be diving right into now. So now, how do you trade these upward trends? Now, the key things I always tell people is that trading an upward trend or whatever trend is not the problem. The problem is, can you spot the trend? And now we talked about how to spot this trend. Easy peasy. We said that so far price keeps on making new highs and new lows, higher lows by an upward trend. So now if you're able to spot an upward trend, yeah, and this is your upward trend here, right? Now the question is, where do you buy? When is the right point to buy? That's the question. And the right point to buy an upward trend is not at the top here, neither is it at the bottom, at the beginning of the bottom here. The best point to buy is to look for buyers is somewhere here, or let's say here. We have what we call early entries. Those early entries are like here. We have just normal entry. We now have like late entries in and around these regions. So now my advice is look for entries here. And now how do you look for an entry here? Basically, price must have broken the last low here, right? Price came back to make this retest. And the question is now, how do we know that price will not continue going back down? This question is what people skip to show you guys. How do you realize that no, price is going to continue going back up or price is going to continue going back down in doing this retest zone? So many people don't talk about this, but I will be showing you now. The first thing that you need to spot out at always every reversals even though you want to look at here and see if price is about to start a reversal, is that price loses momentum. Like the candle sizes, I'll show you guys in the live chat. The candle sizes reduces. You understand? The candle sizes as times progresses reduces. For example, if it was a big candle when it started from the bottom, as it's going, the candle sizes will be reducing. Then you now start seeing weak rejections, showing that the bears are kind of pushing in power. And the next step, you now start seeing a sell to the downside. It's momentum. So the same stuff here now. You'll be seeing weak rejections, reduction in candle sizes that price can no longer push to the downside. Then the next step you're going to see is engulfing candles to the upside, and voila, check your buys. So with this all enough said, I would like to do a little review on my trades I took. Okay, no, I'll not do a review on the trades I took. I'm going to show you first of all what I just taught you. Then I will show you a review on the trades I took, which are basically the same kind of stuff. So let's look at this GU setup I took here. So basically, identifying your trends is very, very important. Pardon this stuff. I just need to switch. So let's just talk about this first stuff now. Let's see, we identify that this is our last high here. Price broke it, price tested it, price went up. And now I told you, how do you know your trend is intact? The last recent low that made this high has not been broken yet. Price just came back into that zone. So we're still expecting those buyers. Now, I told you early entries are here. Nice entries are somewhere here. The late entries are at the top. So the best opportunity you could get is in and around this middle point. So since we spotted this opportunity on the 2-hour time frame, it's advisable that you could go to like 30 minutes or 1 hour to start looking for a change of trend trades so that you could be able to be able to look for buys. Now, easy peasy guys. If you can spot properly, you would have seen that there was a nice resistance in and around this zone, but let's just keep that aside. Let's look at this. Let's focus here. Now we'll be making highs and lows. If you're conversant with how to identify highs and lows, there was a high here, there was a low here, there's a new high, new low, traded from a new high, kind of a low here, still below this last low that was formed here. And now price formed a new high, formed a new low, continued pushing up, continued pushing to the upside, and now came back to retest the resistance that was in and around here. Then we took our bias. You understand? So what am I trying to say here, guys? If you cannot understand how to spot a trend, you will not be able to understand how to trade it. You understand? And it's just easy peasy, like I said here. Watch. I said, if you're using the trend lines, old traditional way, I told you guys, you could actually have a break of a trend line, like you see, we have a break and we have the retest and we took our buys, or you could wait for structural changes. And the whole scenario here, the whole stuff I'm trying to explain to you guys is, imagine you saw a trend on the 4-hour time frame moving to the upside. On a lower time frame, this whole retest, let's say on the higher time frame, this retest is occurring. On a lower time frame, this is a whole trend, you know. So what you could do is that, since we know we're trading break and retest, yeah, all we would have done is a high, a 4-hour retest on the time frame to be a trend, and it will be forming this trend like this. When you wait for the price to break the last recent high to show that your structure has changed and you're going to continue bullish, and you look for buys in and around these regions. And that is what I did here. So let me show you the exact same stuff I'm just saying now. We saw those set up on 2 hours. Let me go back to 2 hours so you see what I'm saying. Price came back. Now we're looking for opportunity. Now the retest has already occurred and price is pushing up to the upside. So this is the earliest form to enter. So don't be the first people to rush into the market. Now, there are structures being formed here. We identify that the last high was formed in and around these regions. Okay, so my bad. The last high was formed here, that formed this low. So price broke the last high, we tested it and continued scaling up. So once price must have broken and retested it here, we're expecting to take our bias. And what did we do? We took our buys up here. Now, you would have asked me, why did you take your buys up here? Its basic thing is there too. The last high was formed. I saw a structural break, a structural retest, nice engulfing candle, and I took my buys. And voila, Here we go. We have our trades running. Now, one thing is that some people do not know how to set a stop. Let's see, the main emphasis here is that if you are able to understand how to trade an upward trend, you will be able to understand how to trade an downward trend. It's just there. It's easy to understand. Maybe the problems you might be able to be facing is how to trade a range, but I'll make a video especially on how to trade a range, trading a range in the market. So today we're just going to be really talking about basically upward trend in this video. You understand? I'll lay more emphasis. So I'll be making more video on the downward trend and key things you should look out for. Then also the range and key things you're looking out for. But today, the topic is just an upward trend inside the market structure. It will be the topic one inside market structure. So I'll create more episodes for you guys to watch. So basically, what I want you guys to get here is just play market structure. Now look at this same stuff now. Go down to 1 hour. We spot that the last high was broken and price came back to retest. Now imagine you're using trend lines to trade. Please guys, if you're using trend lines to trade, do not just buy because you see a price touch on a trend line. I especially made this what do you call it? I especially make sure that I have something like this on my charts and just God just showed us the opportunity. See, price just touched the trend line and expecting to buy. No, always wait for structural change on the lower time frame for you to buy. And now price came back down. This was the last low that made this lower low here. And what happened? Price broke to the upside. And how do we take our buying opportunity? So many people will be wondering. Now I go down to like 5 minutes to explain this stuff. See that structural low in and around here, all this market debris. Now, like I said, price broke above, price retested. Now, all I did was have my buy stops above here because I feel that if price should continue to the upside, there is more probability that if price should break above this last high. This is a very low time frame, so it's something that I have actually traded for a long time and it's working definitely. So I said if price is able to break above the last high, so we should be able to continue on buys. Price broke and tapped in my trade. Now structure is always structure, guys. This was the last high point. See, price came back to retest it and continue. It's there, guys. Like there's nothing really hard. Yeah, it's there. Structure is always structure. If you don't understand how the structures are being formed, like I said, um, make highs, make lows, make highs, make lows, make highs, make lows, make highs, make lows. Easy peasy. If you can be able to track this stuff, you'll be. Now let me give you guys a quick tip. How to know a high and a low. How to spot these highs and lows. A bullish and bearish candle at the point is always a high or a low. Now, what makes it a higher high or a higher low is when it is previously is higher than the previous one that I made or lower than or lower than the previous one that I made in the downward trend. That is when it is higher high or higher low or lower high or lower low. You understand? So if you can understand how to identify a trend, I'll make a video on that too, guys. But the topic of this, the main key notes I want to transmit in this message is market structure, understanding how the market moves. And the first thing we talked about is just an upward trend. And we said that an upward trend is being formed based on the formation of new swing highs and new swing lows. New swing highs and new swing lows, new swing highs and new swing lows. And I said, how do you trade this upward trend? The easiest form to trade this upward trend is seeing that you can actually look for buys in and around the last low that was formed. Now, there are things that we look into in an upward trend. We have two phases in an upward trend. We have the push phase, and the push phase is always the phase that made the new high, and the exhaustion phase is the phase that made the new lower low. Yeah, sorry, higher low. So this is a push phase, and this is an exhaustion, push phase, and exhaustion. So you dare not start looking for buys in an exhaustion phase, in a push phase where it has already gone close to the previous high that was formed, which is here. So you either you don't get in here because it's too early and it's unconfirmed, unless you have the strategy that holds it that is confirmed, but it's cool though. So you see, it's not about the strategy you trade, guys. It's all about you knowing what you're doing and believing in yourself 99% of the time. Understand? So that 1% might be just a little loophole that you should work on. So guys, now you don't look for buys in and around anywhere here. Look for buys in the middle here. Let's say here mid-late entries, but not at the previous high because price might choose to do this. Swing high, swing low, high, 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 low, high, high, and now you're looking to take buys, your price might form a double top and continue to scale down. And we know the double top is like a reversal pattern, and you're gonna miss everything out and you hit your SL. Now, a quick tip, guys, for those of you that always say, I take a trade and it always hit my SL and goes back to my direction. See, guys, the problem there is that you fail to identify structure and you just got into early. So my quick tip is, please, if you're trading break and retest strategy or support and resistance, and you see your resistance get broken on a higher time frame, please, guys, wait for your retest on the higher time frame. There's scaling into a lower time frame to look for trading opportunities. Do not make the mistake of seeing a break on 4 hours and going down to 15 minutes to look for a retest and structure for you to make that, because basically it might choose to do the 4 hour retest, but each time frame has its own retest basically. So if you choose to do, if it chooses to, you might be unlucky. Then there's nothing like luck in trading, you get. So you might be unlucky and you get stopped out and later price moves your way. Now let me show you what I mean by that. Now imagine let's say this is a 1 hour setup. Well, okay. Imagine this is a 1 hour setup. Let's say price is coming back all the way down here, and let's say you saw price at this high pushing up to this high, close to this previous highs. You just be like, okay, fine. I want to just rush and I want to rush and look for buying opportunity. Now you saw it, you now go down to a lower time frame and you're looking for buyings. You're like, wow, this is a nice bullish engulfing candle to the upside. What do I do now? What do I do? Okay, let me just execute buys. After this candle must have closed, I have a stop loss right below here. Or you will just have this, you got stopped out, and you see in the next like few 10 pips or 15 price reverses and goes back up high to these regions, and you're going to be so paranoid at that moment. So what am I saying, guys? Whenever you spot an opportunity, a break on any time frame, do well to wait for a retest on this time frame. You might take this information as a minute one, but trust me, if you want me to make a clear explanation on what I just said now, just write in the comment section. I'm going to make a specific video saying or explaining this stuff to you clearly. So key things to understand in this video is an upward trend is made up of a high and a low. So a future of an upward trend is that it keeps on making a new high and a new low as it goes up. So if the high that is made is higher than the previous ones that was being made, that means the trend is staying track. But once price breaks the previous low and retest it, that means the trend has changed. Now you can see the same kind of setups I got on Nasdaq. Okay, let's talk about this one. Now, if you're trading trend lines, I say do not be the first to always get into a trade of a trend line. Now we had price come here, one touch, first touch, second touch, third touch. Now I spotted the last low that made all these highs, and I waited for price to break it, price retesting it, and I took my sales and I still smashed my TPs. Same stuff here, last low formed. If you're using your trend lines, you see price broke it, price retested it, and I took my sales. Same stuff here. This is the trend line here above, price broke it, price retested it, and I took my buys. It doesn't get old. Now, this is not a trend line trade. Watch. Price broke the last high, we tested it here. Last low was formed here. I wait for price to break above, price retesting it. And what do you have? Your buys up to this region. So guys, this shit cannot get easier than this. You just have to calm down and work hard. It's not really a hard thing, guys. It's not really a hard thing. It's just your, how will I put it, the way you think, guys. Just your psychology. If you have a poor mindset, you get poor results. If you have a good mindset, you get good results, guys. Always, guys. So nevertheless, guys, we've come to the end of the video, and I hope you grasp the main point here. The main point is understanding market structure, and I spoke to you on how to buy knockout trend, and where to look for buy, so you don't go back and make mistakes. So please, guys, there are key factors. If you want to backtest too, there are key factors to backtest, and I'll talk about it in my next video. So that's why sometimes you backtest and it doesn't work out the way you plan. So guys, I'll talk about factors you should consider before you backtest. So in a nutshell, I appreciate your time, guys, for watching this video. Please do well to like, share, and subscribe, please. Very, very important, so that you help us grow, guys. Don't forget to share with your friends. Thank you guys for staying. This is your boy Ghost, and signing out.